Hi to all my beautiful subscribers. I hope you're all well today, living your life and being happy. Life's very short. Be kind to yourself, be kind to your friends and family, be kind to your animals, and just be kind to people generally. I'm a little bit sad today because one of my dearest friends lost her beautiful vision-free dog after 13 and a half years, and he suffered with quite a bit of illness in the last couple of weeks, and she just adored him. And you know, he was like almost a person. He was so intelligent, and I loved him too. So his name was Kobe, and I'm not religious, but I'll light a candle for him tonight. He was the most beautiful dog. You know, old age and sickness is such a curse, honestly. And you know, I'm not always serious, but you know, that's why I always say to people, please do look after yourselves and the people around you, and even the strangers, because you just don't know when you're going to go. Seriously. Anyway, I thought I'd do a video. It's a bit of a hodgepodge of things, and sorry if I've got spelling errors in my PowerPoints. I mean, you know, I'm sure you can all cope with that. Basically, I thought I'd talk about Turkey, obviously the emerging market debt scenario, and currencies, and how that all fits into cryptocurrencies, and particularly, whoops, I've got a spelling error there, particularly Ripple and XRP, and just give you a bit of an update on Ripple and XRP as well. So it's going to be a long video, so I apologize for that. So I'll tell you up front, but it is a bit of hodgepodge with a lot of stuff in there. So it is educational only, as you know, and you know, I'm not a financial advisor, so I'm just trying to fit all this in, what it means for cryptocurrencies. So I don't know your risk tolerance, I don't know your financial position, I'm not giving advice, it's only education, as you know. So the first thing I want to talk about is emerging market debt currencies. And since basically January of this year, against the US dollar, they have been falling massively. So literally, you know, they've been falling, say, you know, 50% or so. So if we look at the Turkish lira against the US dollar, it's fallen like about 50%. The Argentine peso, again, has fallen, you know, 40 odd percent. And the Indian rupee and the South African rand are all starting to fall as well. And that, you know, that's what they call a contagion effect. When we see emerging market currency starting to fall, it affects other emerging market debt as well, because any investor that's in emerging market debt currencies or emerging market debt, you know, say they've got debt in Indonesian rupiah or South African rand or whatever, they start to get out of that debt. They start to sell it off, and they start to go into US treasuries. So it causes this massive interconnection between different markets. And when currencies come off in those individual currencies like the Turkish lira or the Indian rupee, also investors tend to get out of those equity markets of those countries as well. So that's why we see the Turkish equity market going down, we see the Argentinian equity market going down, the South African rand, and the Indian equity market as well. Not only that, we also see the Chinese equity market going down. Now, with one thing or another, this has been caused, obviously, yes, there's a little bit of political argy-bargy, which I won't go into, but it's been caused by trade wars, obviously. And with trade wars, it's not great for the emerging market debt economies or the countries involved, because they have so much debt in these countries. The only way to get out of it is to export, basically sell goods overseas, get receipts in so they can pay down their debt, or create growth at home. So for example, in Turkey, they've got a massive debt problem. To get rid of that debt, they need to either export and get income coming into the country from selling product to other countries, or they need to generate home growth, i.e., you know, businesses at home that are going to generate things for the economy and generate growth, people getting employed and spending money and that sort of thing. So this, you know, this currency decline is been swift and it's been massive. And what happens in this situation, just like in Zimbabwe, the currencies of these countries fall so quickly that any person, any individual living in these countries that has money in their savings account in Turkish or in Argentinian or in Indian, you know, obviously that basically gets obliterated against the US dollar. So say, you know, you had 1 for 1, say you had 1 Turkish lira against 1 US dollar, you go to the States and have a holiday, right? And you've got, it's 1 for 1. But the minute your currency starts falling against the US dollar, it becomes 20 cents against the US dollar. You need more Turkish lira to buy anything overseas. And also you need more Turkish lira to pay down your debt. And often the debt that you borrow from other countries that give you the money will be in, you know, US dollars or euro or something else. So you see what I'm saying? If the Turkish lira falls and they have to pay back their debt in US dollars, it's costing them more Turkish lira to pay back that debt. And it becomes a spiral. In other words, as their currency declines down, 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 it costs them more to pay back the US dollars of the debt and in interest rates. And what happens in these situations with governments, central banks particularly, the Turkish central bank is no different to any other central bank, they raise interest rates in their home market in Turkey to try and support their currency, being the lira or whatever it might be. Now, Turkish interest rates are 25%. You know, Australian interest rates, you know, are 1.5 to 2 or 3%. US are the same. These guys have to raise rates to support the currency. But not only that, as the risk gets worse and worse, for them to keep holding on to, say, the US dollar debt or getting someone to pay to fund their debt, they have to raise the interest rate because there's more risk. So as there's a crisis in this country, you as an investor, say in Turkey, and you were happy before when there was stability to invest at, say, 10%, you as an investor are going to demand a higher interest rate to give them money, right? Makes sense? Because you see the risk is becoming worse and worse, and there's a risk they may not be able to pay back their debt. Now, it becomes an absolute spiral when this happens, because when interest rates get increased massively, like you've seen in Turkey, it cripples the economy. If you're a business owner in Turkey and you've got a loan and you borrowed that, say, 5%, and all of a sudden, you know, interest rates go to 25%, and you had a variable loan, not a fixed loan, just like a mortgage, all of a sudden you've got to pay back 25% interest. And as a business owner, you're only getting so much receipts in from the business, and all of a sudden you cannot afford to pay a loan of 25% rather than 5%. So you see what I'm saying? It actually increases the burden on businesses, and it becomes a spiral. And then businesses in the home economy of Turkey go broke. And then it gets worse because the economic situation gets worse, the currency falls worse, and they get in this debt spiral with no economic growth, high unemployment, lots of businesses going out of business, and it just gets worse and worse. Now, what's this got to do with crypto markets and other markets? A lot. Because what happens when the currency goes down so quickly, the individual that's living in Turkey or Argentina or whatever starts, just like we saw in Zimbabwe, they start to look for other alternatives, i.e. Bitcoin and XRP. They start to look at other alternatives to place their money, so their money is not exposed to a massive decline in the value of it. So say, for example, Bitcoin's only going down by 10% and Ripple's only going down by 10%. You know, the Turkish lira, as we've seen, has gone down by 50%. So it's a matter of relativities. If I've got money sitting in Turkish lira and I look at the cryptocurrency market, I'm going to go, wow, that's only going down by 10%. I run the risk if I hold Turkish lira, it could go down a lot more than 10%. It could go down 100% against the US dollar. You see what I'm saying? So you're basically looking for a safe haven, something else that doesn't go down as much. Now, obviously in these countries, often there's exchange controls, particularly in South Africa. You cannot take money out of the country. So clearly you need to find something where you can take the money out of the South African rand and put it in something else. And that's where cryptocurrency markets come in. Okay, and we've seen it in Zimbabwe, we've seen it in the Middle East, and we've seen it in other countries like Argentina. So when there's more and more currency crisis, and these countries cannot pay their debt, and it's a spiral, like I said, where the economic environment gets worse and worse, and they can't pay back their debt, the individual businesses and companies in these countries need to look for an alternative. Otherwise, they're holding currency that could be worthless. Now, we saw that also in Germany pre-Hitler in 1933. Currency became worthless and there was hyperinflation, which means the costs of goods went up massively because their currency is worthless. See what I mean? When their currency goes down, if they want to buy anything abroad, it costs them more money. And that's when they bring a good in and someone wants to buy something, you pay a fortune for it because your currency is worthless. So let's go to the next one. So all these emerging market debt countries have loans. And these loans, and this sources from the Bank of International Settlements, which is very well known, they have massive loans in Asia Pacific, Africa, Latin America, and Europe. But mainly Asia Pacific, Africa, and Latin America have massive loans. And as I said, as interest rates go up higher, because the central bank, say in Turkey, is raising rates to try and hold the currency up, interest rates go up to 25%, it makes it harder for them to pay back their debt and their interest repayments. No different to you having a mortgage. 1 minute was at 5%, and then all of a sudden your mortgage bank, and you are on variable, decides to raise your mortgage to 25%. You're not going to be able to afford to pay it back, and you'll default on the mortgage. The same things happens with these countries and their debts. Now, Germany, for example, has lent a lot of money to Turkey. That's why the euro against the US dollar is going down. China has lent a lot of money to Africa. In parts of Asia, other banks, Barclays, lend a lot of money to Asia. So different banks lend a lot of money to different countries. And that's why you see the banking stocks also get affected, because now they're worried that their loans aren't going to be paid back. So what it does is higher interest rates cripples an economy and it sends the stock markets lower. And that's why we're seeing the Dow and the US equity markets also come off. So it's all interrelated. Now, coming back to crypto markets, what are Turkish citizens doing? Turkish citizens are going, oh my God, my currency against the US dollar has been eroded by 50%. They're worried it's going to go down even further and further. So they're trying to get their currency out of the banking system, and there might be banking controls that stop you from doing that, like we saw in Greece, where you could only take out $200 euro. You weren't allowed to take out any more. And the Greeks had a run on their banks, and I was there when that happened, and you couldn't get any money out. Now, the Turkish banks could do that as well, where you can't physically get your money out, and the lira keeps going down. So what the smart Turkish citizens are doing are exchanging their lira into XRP and Bitcoin. So they're selling lira and they're buying XRP and Bitcoin. And as I got this from @C3_Nick, and I always source my references. If I use anyone's stuff, I always source it because that's just etiquette. As C3_Nick said, this is their cryptocurrency exchange. People are buying XRP against Turkish lira, which is TRY, because they're saying Turkish lira is going to fall more than XRP. And that's the key. When we see dislocations in foreign currency markets where things go down, 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 and we see equity markets falling massively, and we see bond markets selling off massively, people look for alternatives to protect their money and their assets. And that's what I believe will happen in the cryptocurrency market when we have the next global financial crisis. And I believe, like Andre Polgar said, I believe one is coming, and it's going to be huge, where central banks will have to be bailed out because they won't have any money. A lot of central banks around the world are actually broke, and they don't have the money to fund or to prop up the financial markets like we saw in 2008 with the Fed Reserve. Okay, so this exchange which Nick mentioned is the Turkish exchange, and Ripple was 16 out of the 177 in terms of trading volume. Now, Ripple company has partnered with over 50 global central banks, and clearly XRP is going to be, in my mind, the global currency in the future, because, as I said before, they have connections with the International Monetary Fund, they have connections with the United Nations, they have connections with the Bank of England, they have connections with the Federal Reserve, they have connections with everyone. They are seriously switched on. Now, I came across a young man on Twitter today, and I don't know him, but I think he's probably fairly well known in the crypto community, the crypto world. And his name's Tony Vase. And I will be kind when I say this, but, what he says about Ripple and XRP, he says it's a scam, and clearly they are very erroneous statements. I looked up on LinkedIn, which is a professional website for professional people that work in banking, financial markets, all sorts of things, insurance. And if you're anyone with any credibility and have the experience and the working experience that I've got and the degrees to top it off, you will be on LinkedIn and have a network of people that know you globally. Now, Tony Vay is not on there. So I've asked him, the young fellow, to please provide his experience, his working experience, and whether he knows anything about the settlement process, financial markets, and the banking system. Now, I suspect he doesn't. And honestly, I have to say, it's like me talking about car repairs or cars. I don't know anything about car repairs or car mechanics, but I don't put myself forward to you guys and talk about car mechanics and cars because I don't know anything about them. And I don't have an ego to say I know about this when I don't. So please, my subscribers, my dear darling subscribers, please, when you listen to anyone or look at anyone's YouTube, see if they're on LinkedIn, see what their experience is, their background, see what their skill set is, find out, do they know what they're really talking about? Because I'm really worried about the cryptocurrency market. The people that are in it have no experience in financial markets or anything, or settlements, and have never worked with Swift or IT systems and high-tech IT systems like I have. And it concerns me that they're actually telling you the wrong thing, and it's erroneous. And it shouldn't honestly be allowed, particularly if you make investment decisions on that, because they are not qualified and they don't have the appropriate degrees. And I've got 3. I'm not skiting, but I have, and I was about to do a PhD, but I decided not to. But I've also got 35 years of experience. I've worked everywhere. And honestly, you really need to check these people in terms of their background. So I just don't want you guys losing any money, seriously, and even if I don't know you personally, I know that you watch me, and I just really want you to be looked after, because I really do care about my subscribers, and I get a lot of emails from a lot of people. So thank you very much. Anyway, let's go to the next one. This is getting longer and longer. Sorry, guys. So if we go to India, we've got, and we know the Indian rupiah is being affected by the contagion effect in Turkey. And what I mean by a contagion effect, if there's an emerging economy like Zimbabwe, like Argentina, like Turkey, and they're all classified as emerging market countries, just like India, it starts to make investors nervous about other emerging market countries. So the big investors, the fund managers, the hedge fund managers, the guys and girls that manage your pension, the insurance guys, they all get nervous. They're not going to just have their money sitting in India, in Turkey, in Argentina, in Zimbabwe. They're going to have it right across the emerging market debt countries, and they're not going to leave one investment there. They're going to pull them all out. So what happens is, when they pull an investment out of India, they have to sell Indian rupiah and they go back into US dollars, okay? Because they don't want the Indian currency exposure and they don't want the Indian currency asset. So just coming back to India, as you know, has a ban on cryptocurrency, but the government is putting up a regulatory government committee where they're looking at the usability of crypto token in the public sector, the domestic sector of India. Now, India for Ripple is a massive market. They have 1.3 billion people in that country, which is massive. Not as big as China, but it's a massive market. Ripple is in that market, and they're in Mumbai, and they are in there for the long term. Ripple are very clever, and they're in there for the long term. Ripple have said they want to be the #1 cryptocurrency in India, and I can understand why, because 1.3 billion people. Bitcoin obviously is at the moment, but Ripple have even considered, and I've read an article about this, even considered giving away 1 XRP to anyone that's interested in India. Now, put this in perspective, 1.3 billion people. Everyone's worried about 55 billion of Ripple, 100 billion. If they gave away 1 cryptocurrency in a lottery to the Indians, which I think would be a really smart move, and I've actually read it in one of their articles, you would not have the supply issue that everyone's so-called worried about, which I'm not, because I know the markets they're looking at, and it's going to be huge. But not only that, you would get every Indian transacting in XRP. Okay, so really, really important. And a matter of fact, I think it was this article here. Look into that article, because there's a lady there that is a part of the Indian team for Ripple, and they've thought about giving away 1 XRP. Okay, and what a thing to do. And Ripple, as you know, are very generous, and it would get the Indian users onto the system so fast it is not funny. Now, the reason why I put this article here is because, as you know, India has banned cryptocurrency. But with this, it's sort of suggesting that their ideology is changing. Also with India, if they continue to have massive India rupiah currency decline against the US dollar, the people of India will find a way, just like the Turkish people have, find a way of basically buying XRP against the Indian rupiah. See what I mean? And that's what happens when currency is falling so fast in these countries, because the people start losing money, and you can't stop the people from buying XRP. Okay, number 1 or number 2, so important. And people out there that really put XRP down don't understand what XRP and Ripple can do. They're working on a system now, which I'll tell you about, where they can actually transact within 1 second. You know, it's an upgrade, 1 second, not 3 seconds, but 1 second. Okay, let's go through this. Golly, it's already 24 minutes. Sorry. Sorry about that, guys. I just get so long sometimes. Okay, another thing I want to point out. With with Turkey. Yesterday, I'm in Turkey. I'm worried about my money. I want to convert it out of Turkish lira into US dollars because I'm seriously worried. And I go on my PayPal account. And you know what? This is what you get. You know, my money's in PayPal. Sorry, we have no choice but to spend processing payments in your region. We will continue to explore to seek to obtain the necessary approvals to enable us to recommend PayPal services in Turkey in the future. So you can't even get your money out on PayPal or the banking system. So that is a joke. No wonder the Turkish people are going into XRP. Like I said, any person out there on YouTube that tells you XRP and Ripple is only for the banks is lying. The people of every population will find out where they can protect their assets, and they will go into cryptocurrency regardless, and they will go into Bitcoin and XRP. But I do believe in the future XRP will be the #1 cryptocurrency in the world. Okay, #1. Another one. So I might have to. This is getting long. 26 minutes. Wow. I don't know whether I should go on or not. I'll have to think about it. Bear with me for a minute. What I'll do is I'll put this in 2 parts, because the first it'll be just the first part, the other one, and I'll make this in a second part. So it's sort of all related, of course. But so look, there's the disclaimer. I don't know about your financial position, risk in cryptocurrencies. You know, don't know your risk tolerance and all that sort of thing. So I'll talk to you soon. This will be part 1, darlings, and I will make the part 2. Okay, see you, sweets. Please look after yourselves, everyone, and your animals. Life is really short. Thank you.